Hello, hope you had a good week. Thought I'd do another one of these stock market update videos. Just before I get into it, I'd just like to quickly introduce myself in case you don't know me. My name is Warren Savidson. I'm a portfolio manager at AfriFocus Securities. We're based in Sandton in South Africa, and we help clients grow their wealth by investing in the stock market. So I have three types of clients. The first type uses our platforms to invest themselves. They can go into our website and trade on the South African stock market. We also have other platforms that we can give them to trade offshore. Then the second type of client is what we call an advisory client. And those clients usually call me or email me or WhatsApp me and ask for a bit of advice if they're looking for a particular stock to buy or create a whole new share portfolio. Again, both local and offshore. And then the last type of client is what we call fully managed. And that's where the client doesn't want to manage the portfolio themselves. They'd rather give it to us to manage it for them. And we do everything for them. Again, both local and offshore. You can take your money out of South Africa and invest in dollars, euros, or pounds in stock exchanges all around the world, the US, Canada, the UK, most European countries, China, Hong Kong, Japan, Australia, etc. So let's get right into it. I'm going to focus for the moment. Let me share my screen here. And let's just have a look at the narrative that was going on in the markets. Most of this year, we've seen that the stock market was expecting interest rates in the States to start coming down towards the beginning of next year. Now that expectation has changed to July next year only, that we'll see interest rates coming down in the States. We've had a meeting by the Fed last week where Jerome Powell, the chairman, said that they're likely to keep interest rates higher for longer and potentially even raise interest rates before the end of this year. So that's spooked the market. We've seen the dollar get stronger on the back of that. And just generally, higher interest rates are typically not good for equities. It makes the average consumer a little bit poorer because now they're going to pay more on their, if they have any debt, such as a home loan, makes businesses slightly poorer if they use debt in their business, working capital, etc. So that affects their bottom line. But that is exactly what the Fed is trying to do. They're trying to cool the economy. Why? Because they are concerned about inflation. Inflation got a bit out of hand recently, and they're trying to calm inflation. They don't want it to get out of hand. So that is what they're trying to do. We would like to see interest rates start coming down again, hopefully towards the end of July next year, and that'll hopefully give a little bit of a bounce to stock markets in general. Then just looking at what's happened in the last month on the South African stock market, on the Johannesburg Stock Exchange. Just over the past month, we've seen the likes of Kumba Iron Ore have a good bounce, up almost 10%. The iron ore price has started picking up slightly. Capitec actually released results this morning, and they were pretty decent, up 8%. Sasol up almost 6% on the back of a oil price that seems to be increasing a bit alarmingly over the last couple of weeks on Russian and Saudi oil production cuts. So that is a bit of a concern because that could lead into what the Fed is doing, or in terms of that could affect inflation to the upside. Pepkor up 5%, Anglo American up 5%. I'm not going to go through all of them. And then on the downside, we've seen Prosus had a corporate restructure, trying to simplify their whole structure between the ownership of Naspers and Prosus. Nampak down 24%. They did a rights issue. Northern Platinum not having a great month, down 14%. FirstRand, overall they haven't had a bad year, but just in the last month coming back a bit. Goldfields down almost 13%. we've seen the gold price pull back markedly over the last week or so, again on the back of a stronger dollar. So just in terms of what to expect going forward, I just want to show you this. This is a spreadsheet I came up with, which gives the analysts' predictions in terms of where the share price could be in the next 12 months. The way this works is most of the companies in the top 40, these are just top 40 shares, by the way, analysts look at all these companies. And for example, on Northam Platinum, there are 10 analysts that look at it, and they each give a 12-month price target whenever they release a report. The analyst with the lowest price target is 110. The analyst with the highest price target is 280, and the mean is 189.70. Current price about 114. So that implies a potential mean, if it does get to that mean price, 66% higher than where it is at the moment. So if we go through the list here, we see Impala Platinum, target price almost 60%, MultiChoice up 47%. That's an interesting one. I think their business model might be under threat from competitors like Netflix and YouTube, etc. Prosus up 46%. So again, with their main business being Tencent in China, the Chinese stocks haven't done particularly well on concerns of what's happening in China, particularly with their property sector. So the property sector in China not having a good time at all. Hopefully the Chinese government can start, well, they've started stimulus already. Hopefully they can do some more stimulus in China to get things going there. Anglo American Platinum, so all the platinum miners, their share prices have dropped significantly over the past year or so. So, if they normalize back to normal levels, hopefully their share price can get back up again. Richemont, the luxury brand producer, 40% price target from where the price is at the moment. They do sell in China, so maybe that's one of the reasons why they've come back down as well. The America as well, they haven't been performing as well, and just luxury brands in general. Their competitors like Louis Vuitton, etc. Burberry also haven't been doing particularly well recently, but the analysts seem to think that should recover in the next year or so. MTN, 35% price target. Growthpoint, the South African listed property company, a price target of 30%. British American Tobacco, another one, 30% upside from where it is at the moment. I'm not going to go through all of them, but as you can see on the downside, we've got Bidcorp. Their share price has really done nicely on the back of really good results recently. And so that's why their target price is only 4.3% higher than where it is at the moment. Sanlam as well, good set of results recently. So the share price has done nicely, and the 12-month target price is therefore only 7% higher than where it is at the moment. Bidvest again, also good results recently. So already had a good run, and the analysts obviously feel that they may have already had their run and not too much more upside. So that's it for now. Remember, we also do offshore as well. So if you'd like similar sort of target price for any of the offshore companies, let me know. You can contact me, or if you'd like to discuss anything else, you're welcome to contact me on warren.s@afrifocus.co.za. That's warren.s@afrifocus.co.za. Hope you have a fantastic week, and if you have any questions, give me a shout. Have a great week.